Are you thinking about buying a home in the Tampa Bay area, but hearing how competitive the market is and getting very discouraged? Or maybe you've already started looking and you're not quite sure how you're ever going to get your offer accepted. It is tough out there, but I'm here to tell you that I have helped a lot of buyers get under contract here lately using some of the very strategies that we are going to discuss in this video. So if you're interested in learning more about that, then keep watching. Hi, everybody. Thanks for tuning into my channel, Living in Tampa, where it's my goal to show you everything you need to know about eating, sleeping, playing, and living in the greater Tampa Bay area. If it's your first time to my channel, do me a favor, hit the subscribe button, ring the little bell, so you'll be notified every time that I release a new video. So let's get started with today's video. I am bringing on my preferred lender, Christine Wilson. She's fantastic. She's going to help me discuss some of these tips and tricks to get your offer accepted in this very competitive market. So everybody, here is my preferred lender, Christine Wilson with the mortgage firm. She is going to help me out today with this conversation that we're going to have that is on everyone's mind that is out there looking for a home right now in 2022. It is definitely rough out there. We are at record low inventory levels. I've never seen anything like it. When a house comes on the market, it is like a swarm of locusts coming upon that house. And there are definitely buyers that are just sitting there waiting to buy a home. So we're seeing a lot of offers come in on just one home that I showed over the weekend. They had 28 offers with like 45 showings in 2 days. It's just the reality of the Tampa market right now. So we're putting together this video just to give you some tips on how you can make your offer stand out, how you can be the winning offer so that you can make that move to Tampa that you've been dreaming about. And we're just going to go over some of those strategies today. But Christine, if you could speak a little bit to this reality of this market that we're talking about. I know we talked last week and you had mentioned to me that you have so many buyers that are just sitting there waiting, right?
Yes. We call it buyer fatigue, because they get so tired of looking and going out. We're actually sending our clients a $10 Wawa card 3 weeks after they get pre-approved, just to give them a little bit of energy because, they just need it, give them a little something positive in the mail. So because, yeah, it's tough for them. It's very tough because of the market. And I want to say to the audience too, because it's not just Tampa, it's not just Florida, it's Texas too. I just talked to somebody, Victoria and I were just talking about a client of mine that I have a clear to close in 4 days because he had to make a cash offer, and we'll discuss this later. He had 38 offers on this house in Allen, Texas, which is right outside of Dallas, Fort Worth area. So it's not just our area, it's everywhere, it's just the lack of building that went on. This is what I hear. I don't know. You chime in if this was something. This is from what I hear in my sources, is that when the building stopped, when the financial crash happened, builders stopped building for probably, I don't know what the exact number is, maybe 3 to 5 years, I'd imagine, somewhere between there. Completely stopped. Well, the human race did not stop populating.
Right.
And so we have exponentially grown and gone to school and had good jobs. And these kids coming out of school right now, these 20 and 30-year-olds that want to go buy houses, they're making great money. I mean, it's really fascinating and cool to see it because their parents said, they're very successful. So it's interesting to see this dynamic, and it's not slowing down because our population keeps on and the building is not keeping up with our population growth.
That's definitely true. And we're not predicting it to change anytime soon. And the builders aren't going to catch up anytime soon either, especially with the lags in the supplies and labor shortages and all of that. So it's all just compounding and, making it hard for buyers. And I really feel for buyers. And, that's my passion, is helping people find their home. And so it's hard on us real estate agents too, to go out with the buyers and, get them excited and find this house, and then they don't get it, and trying to keep them, encouraged and continuing to try. So hopefully this video will shed a little bit of light on what buyers can do to really make their offer stand out and get accepted and get into a home. So let's just go through some of the things that we have used in the past that have worked. And I'm going to start with cash, cash being king. And in this market, it's really important, to be cash heavy, maybe more so than ever, because the seller is really looking at the whole picture. They want to have a buyer. When they have this many buyers to choose from, they want to make sure they have the most solid buyer. And so they're looking at, how much you're putting down on your loan, how much, you might be willing to pay in an appraisal gap, which that's something we can talk about, is appraisal gaps and how those works. And if you could maybe speak to that, like from a loan perspective, that would be great, Christine.
Yeah. So when you're saying cash, so if they don't have cash, then if it's cash, then it's super hard. And then it's hard for the buyer. And you tell me, it's hard for the buyer to put themselves in the seller's position. They think for the buyer, and this whole thing is about the buyer's reality. Well, the reality is the seller has 20 to 30 offers on a house. And so when you are a seller, if you're out there and you're a buyer and you're looking, you got to think like the seller. Don't think like a buyer anymore, because there's not 1 or 2 offers out there anymore on the house. There's 20 to 30. And so putting yourself in the position of the seller and having the seller look at their offers and what do they have to choose from, of course they're going to pay. Cash is always king, and it's fast and it's easy, and there's a lot less contingencies or a lot less hurdles to jump over. And so if you don't have cash, then you try to remove as many contingencies as possible. All right. And so that's what we're kind of always do. The number one thing is we've done a show, we did another show, is removing the contingency of the sale of the home. That's almost, you have to do that. There's no way you can make an offer that's contingent upon the sale of your house. Correct?
Yeah.
Right,
sellers are not going to take that right now.
Right, because that's just way too convoluted for the seller when they've got the other 29 offers don't have that. Why would they take your offer on the sale of a home? And so as lenders, we are always trying to figure out, we go right to, okay, what other cash do you have? What other, can you get a gift? Can you do this? We are going to anything to try to eliminate that contingency of selling a house. So that's number one contingency. That, and then the other contingency is, do you need an appraisal? Now, the lenders doesn't always need an appraisal. So this is kind of an interesting, we have been getting, if you're putting 20% down or more on a house, you might, and if the house falls into a price range that is acceptable to Fannie Mae and Freddie Mac, because they've been keeping track of all these property values over the last 10, 15 years and banking in all this information. And so when we lenders run this loan through a computer underwriting system, Fannie Mae has their own desktop underwriter, and Freddie Mac has theirs, Loan Prospector. We run the loans through it, and it picks up on the address, and it will tell you whether you get an appraisal waiver or not. Now, we were seeing a lot more of these appraisal waivers when the home prices were in more of the range. Now that people are willing to spend 50, 60, 70,000, 80,000, I mean, we've seen it all over the appraised value, then of course you're not going to get the appraisal waiver when we're way over. But the deal that we just had, we had clear to close in 4 days. I got the appraisal waiver. So whenever the real estate agent put the offer in, it was not contingent upon appraisal. And it was he had the cash, so we did make a cash offer. He has the cash. He's 60-something years old, has worked in IT forever. He had the cash in his 401k, but of course he doesn't want to use it. So we made the cash offer, but we also didn't even need an appraisal, because sometimes they have a cash offer, but we lenders, and they want to get a loan with us, and maybe we can close in 2 or 3 weeks, but we still need an appraisal. And that kind of inconvenience, that's another hurdle to the seller, that, well, I thought you were paying cash and now you need an appraisal. Well, you can always get an appraisal. It's not contingent upon the appraisal, but you can also order your appraisal still, just to know how much you're paying over the amount. But when you can make a cash offer and have no appraisal, you're going to get your chances of getting your offer accepted are pretty good.
Yeah.
In that situation, that buyer, and this is on our list, the buyer also paid $2,000 towards the seller's closing costs.
Right. So closing costs, that's something that, a lot of buyers, I think, kind of tend to forget about. They're like, oh yeah, I can pay an appraisal gap, but then I'm sure to remind them, hey, you've still got your down payment, and you've still got your closing costs. And a lot of times, that takes up a lot of people's cash. So if we're, speaking more to maybe younger buyers that don't have quite as much savings, or, people that just don't have that cash, paying a portion of the seller's closing costs might be a good strategy to use if you're not able to, say, pay cash or pay a huge appraisal gap or something. There are seller side closing costs, which are significant, and there are buyer side closing costs. So I think that's definitely a good strategy, is to offer to take some of that burden off of the seller, associated with their closing costs, for sure.
Yeah. Burden.
Yeah, well,
yeah.
You're
selling the best market there is, and you have the least amount of people, just, it's just crazy out there. It really is.
It is crazy out
there. Let's talk about the appraisal gap, because we're kind of mentioning that, and we probably should explain how that works.
Yeah. Let's explain that. I'll let you take the lead on that.
Well, actually, you guys are the one that you write the offer. So explain how the contract works, and then I'll
so the way that we write it into the offer, the verbiage that I use is that the buyer agrees to pay X amount over an appraisal in the event the appraisal comes in lower than the purchase price, not to exceed the purchase price. So basically, let's put it, I'm more of a visual person. So let's just put it into easy numbers. And let's say we're working with a house that's $500,000 and you offered $525,000, right? So you're offering that much more than the seller is asking. So it only makes sense for you to also offer to cover that difference that, in the list price to your offer price. So that would be an appraisal gap of $25,000. So what that means is, if the appraiser goes out there and appraises the property and he says it's only worth $500,000, you're still agreeing to pay that $25,000, and that's going to come out of pocket. That's not going to be able to be financed, because you can only finance the appraised value of the home. Right. So basically that's how it works.
Yep. And what's really important on lending side is, if that appraisal comes in lower, that they have that cash, because lenders will only lend on whichever one of these numbers is lower. Our numbers get based on the appraised value or the sales price, whichever is lower. So if that appraisal comes in lower, then all of our numbers are going off of that appraised value. And by the way, this is an interesting point that's coming up, is that a lot of lenders will not, if it's FHA, but right now we're not getting a ton of FHA deals, I know that, but I get this question a lot with other types of loans, with a VA, FHA, and can I pay up over the appraised value? A lot of people just assume they can, but you can. Yeah, because the house is not what the lender says it's worth, not that what the house is worth what you're willing to pay for it as the buyer. That's what the house is worth. But the lender is going to go the more conservative route if and when possible, because they have a lien usually for more than 70, 80, or 90% of the value. So
to protect
and so the lender is going to go conservative. So, and the appraiser, that's just the human being's evaluation based on the other comps. I mean, like, I'm willing to pay more for a house if it's right next to my best friend, and I want to retire next to my best friend. I'm willing to pay 30 grand more, because I don't care what that 30 grand means down the road 50 years from now. I just know I owned a house next to my best friend. Right. So the house is worth what you're willing to pay for it. And that's something to keep in mind. And why people do appraisal gaps, this is a good one too. Because appraisers are human beings.
Yes.
And when you have a human being element, you can have lots of opinions.
Right.
And that's all it is this human beings. Now, it is a professional human. Now, these appraisers are apprentices for I don't even know what we're going to do with appraisers, Victoria, because no one is getting into the appraisal business. I mean, do you know anybody, young adults, that are getting into the appraisal business? Nobody wants to do it, because you have to apprentice for 3 years to become a property appraiser. And then you get to be a property appraiser. And then you go out and do your inspection, and their appraisals are somewhere between, I would say somewhere between 450, maybe really inexpensive for 450, up to about 750, you know, depending on what market you're in. But the appraiser's doing the inspection, they're going out, they're spending gas money, they're spending their time in the office to get the report done, and then they get the report done. And then they're beat up from every side there is.
That's
from
so
lending,
true.
from the buyer, from the real estate agents. And so, and you could have people that are not that experienced in that market. You know, you could have somebody from your area coming over from Tampa from, I don't know, where's like an area that maybe from Lakeland to Tampa, where they might not be really involved in the Tampa market, but they're close enough because they're Lakeland, you know,
Right.
but you
Right.
know, but they might not know exactly what's going on in that downtown or that specific area of Tampa. So, and so you can have that where that appraiser comes over and they just don't know. And it's an appraiser's opinion, and they could be off 15, 20, 30,000, and that could really mess up the deal. So
Yes. Yeah.
appraisers are a big part, and it is not thought of when the buyer is in the beginning stages, getting pre-approved and picking a lender. And there's big differences in lenders and how they work with their appraisers. As a branch manager, I get to pick, we pick all of our appraisers on our list. I get to pick them, and they get rotated between, because the law states I can't use one for everything. We used to be able to do that in the day. That was very bad. And now we have to rotate between all of our appraisers. But that's not the case. A lot of banks use what's called appraisal management companies, and appraisal management companies are now taking a piece of that 400 to 750 or however much the appraisal, they're taking a cost of that, and probably hiring people maybe with less experience. You know, and that's what we're seeing in the appraisal area. So it's super important to have appraisers that know what they're doing, that are out there.
Exactly. But to your point, they are, you know, an opinion of value, and it's going to vary. You know, one appraiser could come out and say one value, and the next day another appraiser, and it might be different. And I do with these appraisal gaps, you know, the buyers are leaning heavily on us as realtors as to what we think realistically the property will appraise at. And I try my best to give them, you know, my opinion of value. I'm not an appraiser. I don't know for sure which comps that appraiser is going to choose and where that appraisal is going to come in. So that's what I always advise my buyers who are maybe considering, oh, let's just waive the appraisal completely. You know, for me as their agent, I don't feel that that's a smart move. And I, you know, caution people not to do that. But if you want to include an appraisal gap, that's powerful as well. But it provides you a little bit of protection to where you're not just blindly saying you're going to pay whatever you're offering, no matter what that appraisal comes in at. You know, you're putting a cap on your liability by the amount that you're putting into that appraisal gap. And I think that just makes more sense.
Yeah, because what if they don't have that? The problem is they're going to lose their deposit money.
Right.
Because it's not dependent on that. Now that's been taken away, which is smart. But just because the house doesn't appraise and my buyer doesn't have the money to pay the gap that was there, that's no longer a part of the loan contingency, and they will lose their deposit because of it. And so, and that's what we're all trying to protect. We're trying to protect that deposit money that went in at the very beginning, that escrow deposit money. And so, and that kind of leads to the next one that we were, that mentioned in here, is doing a higher escrow deposit.
Yes. Yeah, the higher escrow deposit is becoming more and more standard. You know, it used to be pretty close to 1%, got the deal done. Now we're seeing more like 2, 3, 4, you know, some people even doing their entire down payment as a deposit. So yeah, you're taking a lot of risk with that if you're waiving all your contingencies. So you definitely want to make sure that you still have some protections built into the contract, you know, in the event that there is an issue with that, because you don't want to, you know, walk away from that big deposit.
Right.
But yeah, that can kind of segue us into another one of these strategies that we wanted to talk about, moving away from the cash thing, because not everyone has the ability to do that. There are some other things that you can offer the seller that, you know, might be really enticing for them. Anything from like letting them pick the closing date within reason. You can specify on the contract to close within, however quickly your lender has told you can close. Christine and her team are fantastic and can close really quick. And then, maybe on the other hand, maybe the seller needs more time in the house and they might prefer a 60-day closing. But, the standard here in Florida for a lot of people that might be watching from out of state, 30 days is pretty normal for us. I know up in a lot of the northern states, it's more like 60 days. But Christine, what's like the fastest you've ever closed a loan? You were saying you got it clear to close in 4 days.
Yeah, legally, we cannot close a loan faster than 7 days. So they have to have that. I believe it's 7 or 10, sorry.
One of those, 7 or 10.
But it's super fast and furious. They have to have a period of time that they have the loan estimate. They have to have a loan estimate and they have to have a closing disclosure. So there are some things in there that make it so that the borrower, and I'm not really, in general, I'm not a big fan of closing super fast. This is the biggest money asset that you have. Even for a cash buyer, I would even say take 2 weeks at a minute. I mean, because you just don't know what you don't know about the house, and things can change.
Time for inspections and the title work and all that anyway. So I would say 2 weeks would probably be the fastest you would want to close.
Yeah. So I mean, it's not that I discourage it. I just say there's a reason why it takes a while to close a loan in a transaction on real estate. And that's because it's a humongous investment and you need a little cooling off period. You need a little bit of, you need a little bit of reality. I always talk to my client, let it marinate. Just marinate in it for a little while, see how it feels, see how you feel a little later, or at least sleep on it, and then take a weekend. That's good. And have you heard of people of waiving inspection? But what they're doing, I've heard this, of people bringing, when they go to see the house, if it's okay with the seller, when they go to view it, they're bringing a home inspector with them.
Yes.
I've heard that.
I mean, so that
it's great. I thought that was a really good idea, as long as the seller's okay with it.
Yeah.
Interesting.
Yeah. Well, that can get expensive too, though, if you're doing that multiple times. Home inspections aren't exactly cheap. You're talking at least $300 or $400 probably.
And hard for the inspector to probably do that on a whim, because inspectors are just as busy as everybody else.
They are. They are so busy. But another one that I like to do is in working with you guys, is having you kind of call the listing agent and speaking to them about the buyer and assuring them of the buyer's credit worthiness and all of that. You've been really great about doing that. Everyone on your team working with me to make sure that, the listing agent knows this is a quality buyer.
Well, I always put myself in the listing agent position. If I was a listing agent, I would want to know that do you have all the documents from the borrower? Do you have a pay stub? Do you have their tax returns? Because there's a lot of things on tax returns that can kill a deal super fast. And so, and do you have their bank statements? Have you seen that they have the money? Sometimes, I mean, bless people's hearts, but they'll tell me they have 10 grand and they really have 7 because they're expecting the 3 grand to come in next week, and so it's so important that, and that's why I always say, please, you have to get your documents into our team, because I have to have conviction when I'm calling that listing agent. I have to tell them that I've seen all this, I've looked at it, and I know that this is a great loan, and I know that they have the money in the bank. I know that they have the money for the appraisal gap that was written in so I like for them to know that that was written in there just in case, because sometimes, what if they don't have the money for the appraisal gap, So it's important that we ran those numbers and made sure that it worked. And then also letting them know that we run it through that computer approval with Fannie Mae and Freddie Mac. So in lending, the computer underwrites it first, and then it goes to a human being underwriter. So the computer has to underwrite the loan and approve the loan in order for it to go to the computer doesn't approve it, then it's not going to a human being. So because we don't have a deal. And I can't tell you how many times, and I'll tell people or tell listing agents that I ran this loan through DU and LP. And that is, I know you guys as real estate agents don't know how important that is, but you need to hear it. If you were a listing, if I was a listing agent, knowing what I know in the lending world, I'd want to hear that, because so many times I think a loan is going to go through, and then maybe it has like a 732 credit score, and they're putting 5 or 10% down. Then I run it through the computer approval, and Fannie or Freddie doesn't like it, and I have to go FHA instead of conventional. And so so it's just super important that that all that's done, and we do that because we don't want any surprises. We want surprises to happen in the first week, if that's you know, the first week of getting them pre-approved and revealing any of that information. So, and we also have we can send this loan. We do in our company, we can send this loan for a approval. Basically, we can send it to underwriting. For everybody out there, lenders don't typically. That's why it's super important for you to work with a loan officer that knows what they're doing, because we don't send every loan to our underwriting department to get underwritten until you get a property, until you get a contract on a home. Your loan sits with the loan officer and or their team, and then it's once the contract comes in, and then it goes to underwriting. Because could you imagine all the people calling in, and if all those loans, we would clog the system of underwriting in general.
Right.
And so we can't send every single loan to underwriting to get underwritten before they go out. That's why they have us. That's why they have loan officers, is because they are mortgage loan originators, so that we do our job. We know how to do our job, and we know what's a loan's going to happen or not going to happen. But sometimes it's super important for us to go ahead and go ahead and send it. Like, it's just nice to know, go ahead and get it into underwriting, get the loan approved. And there's always going to be some things that we're going to need. It's not going to be fully approved, because part of the approval is the home itself.
Right. Yeah, and the
subject
appraisal and all that.
So it's still a conditional approval. It's not a final approval, but at least we're, I would say, about halfway there.
Yeah.
So we have that option.
Yeah, that definitely helps. All those things help. And those are all kind of from a cash and a contract perspective per se, but there's also some little funny things that people are starting to do that, we've never seen before. I mean, ever. Like the one that you had mentioned earlier was throwing a party for the people when they leave, like a pizza party or a taco party.
A taco party. I heard somebody got their offer just because a taco party was offered.
Yeah, offering the taco party for the farewell party for the seller. I've heard everything from paying for a cleaning service for the seller, helping them pay for their move, all these little things that you can think of that might just make your offer stand out. What's the other one? You mentioned another one that I can't think of right now.
Well, the one that because this is what I've heard, and people have been doing this for years and years. And so and I want to talk about is the writing the letter of the heart to the seller.
Oh, yes. Yes. Thanks for the reminder of that, because I do get a lot of buyers asking me, hey, I heard it's a good strategy for me to write a letter. I want to send you a little picture of my family and tell you why, we love this house and why we want to be in this house. And that used to be something that we did on a regular basis. But here just recently, the National Association of Realtors has actually put out guidance on that, where that can be considered a violation of the Fair Housing Act. So, your family's cute and I love the pictures and all that, but hey, if the seller chose your offer over another one because yours was a family, or maybe it's a cultural, they chose it because of cultural preference or something like that, that can definitely be a violation of the Fair Housing Act. And we as realtors, that's unethical for us to be able to do that. So we have stopped accepting those. My company has for sure stopped accepting them. I know there might still be some realtors out there that do that. I'm not saying anything negative about them. But I am just saying, if you decide to do that, you've got to be really careful, because it is not acceptable anymore.
Again, putting yourself in the seller's position and stop thinking like a buyer and thinking like a seller, you could actually be hurting yourself. And whenever in lending, we have to have people write their letters of explanation. And every time we have the buyer write their own, it's like this long. It's way more information than we needed. And usually some of that information, I'm like, no, I don't need to know the color of your cat. I just needed to know what this deposit was. And so I would say as a buyer, writing that letter might actually impede you on getting your offer accepted, because they might say, well, I didn't want to sell to a family. I didn't want to sell. I'm a single person. I want to sell to a single person, or whatever it may be, you know? And
Yeah.
so putting that information out there could work in the opposite direction for you as well, right?
Right. And just going off of that, you just made me think of another thing. I know this is getting long, so we'll wrap it up here pretty quick. But one more thing I had happen was where I had some buyers reach out directly to the sellers and kind of plead their case via, I don't know how they even tracked down the seller's email address and sent them this, long email from the heart that they thought was so great. Well, the seller's agent actually called me and reprimanded me, like I hadn't participated, I didn't even know the buyer was doing this, but said, the seller was very offended by that, and it actually took their offer out of the running completely. So it really backfired on them. So you do have to be careful. I know people are anxious and they're trying to just find any way they can to get their offer accepted, but definitely things like that, run it by your agent, and don't just go out there and do things that might work against you, because we're here to help.
Yeah, and get your offer accepted.
Right.
That's what I
That's
always
what we
say.
all
The
want.
agent's job is to get your offer accepted. That's what they're doing. That's what they're trying to do. Let them do their job, right?
Exactly. So hopefully all of these strategies that we discussed today will be helpful to you in getting your offer accepted. If you're out there looking for a home, we'd love to help you. Christine would love to help you with your loan. If you have any questions on the lending side, I'm going to put Christine's number down here on the screen below. Feel free to reach out to her or send her an email. Christine, I thank you so much for your time with me today and explaining all of this and helping the buyers to get into a home. And we'll make another one of these on another topic soon. Well, I hope that these tips have really helped you to get a better understanding of what it's going to take right now in March of 2022 to get your offer accepted in this very competitive seller's market. Don't give up. Work with an experienced professional. If you are looking for a realtor in the Tampa Bay area, I would love to be your agent. It is my passion to help buyers find the home of their dreams. So go ahead and give me a call, shoot me a text, send me an email, whichever method of communication you prefer is fine. I'm always available. And when it comes to moving to Tampa, I've got your back. Do me a quick favor, click that little subscribe button, ring the bell. It really does help me out. I really appreciate it. I hope you found this video useful, and I'll see you next time.